Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about PROG Holdings INC quarterly report. PROG Holdings Inc. provides various financial services and products to consumers in the United States through two main segments, Progressive Leasing and Vive. The company's offerings include lease-to-own solutions for in-store, app-based, and e-commerce point-of-sale second look, revolving credit products, buy now, pay later payment options, with 4 interest-free installments build, a credit-building financial management tool. These services cater to consumers' need for flexible and accessible financial options. The decline in PROG Holdings, Inc.'s stock price by over 28.21% in the past year can be attributed to several key factors. The company's persistent consumer headwinds, including inflationary pressures and financial strain on lower-income households, have directly affected consumer spending and demand for its lease-to-own and buy now, pay later (BNPL) services. The decline in gross merchandise volume (GMV) for the Progressive Leasing segment has also contributed to the stock price drop. This reduction was largely due to tighter credit decisioning criteria implemented by the company and the bankruptcy of a major national retail partner. Additionally, PROG Holdings' revised financial outlooks have reflected a more conservative stance on expected revenues and earnings, which can dampen investor confidence. Market volatility and investor sentiment have also played a role, with general market shifts making financial stocks like PROG Holdings sensitive to negative sentiment. The cumulative effect of these challenges has weighed heavily on the company's stock performance over the past year, despite some quarters showing stronger performance. The strategic sale of the Vive financial portfolio in October 2025 may help improve capital efficiency, but its immediate impact remains to be seen. The primary drivers of revenue growth or decline can be attributed to several key factors. On the growth side, lease revenues have increased due to a larger gross leased asset balance, while interest and fees on loans receivable have also seen an uptick in the third quarter of 2025. Additionally, other operations such as loan originations and GMV at 4 and other strategic operations have contributed to revenue growth. However, there are also several drivers of revenue decline. The smaller gross leased asset balance at the beginning of Q3 2025 compared to Q3 2024 has led to a decrease in lease revenues. Furthermore, the loss of Big Lots as a major POS partner due to bankruptcy and tightening of decisioning posture have resulted in lower GMV for Progressive Leasing. The decline in interest and fees on loans receivable is also noteworthy, with a significant drop in 2025 compared to 2024. Overall, these factors highlight the importance of managing lease revenues, loan originations, and strategic partnerships to drive revenue growth while mitigating the impact of declines. Net income and profit margins overview. The company's net income experienced a significant fluctuation between 2023-2024 and 2024-2025. In 2023-2024, the net income decreased by $33,380,000 or 24%, resulting in a net loss of $2,675,000. However, in 2024-2025, the net income rebounded with an increase of $106,581, reaching $3,061,000. The profit margins also underwent changes during this period. The operating profit margin remained stable at 9%, while the net income margin increased by 2% from 6% to 8%. This improvement in net income margin can be attributed to a decrease in operating expenses or an increase in revenue. Overall, the company's financial performance showed signs of recovery and growth in 2024-2025 compared to the previous year. The company is indeed generating positive operating cash flow, as evident from 2 separate financial summaries. According to page 8, the company's operating cash flow value was $389,865 for 2024. Furthermore, page 45 confirms this trend, reporting a significant increase in operating cash flow to $389.9 million in 2025 and $223 million in 2024. These figures demonstrate a consistent pattern of positive operating cash flow, indicating the company's financial stability and ability to generate sufficient funds from its core operations. The company's debt level and interest expenses have undergone significant changes over the past year. Regarding debt level, there is a decrease of $49 million as reported on page 44, with the current gross indebtedness standing at $600 million as of September 30, 2025. This indicates a reduction in debt from the previous year's figure. However, interest expenses have shown mixed results. On pages 6 and 38-40, there is an increase of $498,000, or 6.7% from -$7,384,000 to -$7,882,000. In contrast, page 41 reports a substantial increase of $2,148,000, or 94.0%, but this appears to be an error as it contradicts the other reports. Page 43 also confirms an increase of 9.4% from $22,973,000 to $25,121,000. In conclusion, while there is a decrease in debt level, interest expenses have shown inconsistent results, with some reports indicating an increase and others suggesting a significant error. The company's financial performance reveals a mixed picture across its segments. The Vive segment experienced significant decline in balance and incurred a loss of -$74 in earnings before income tax. Progressive Leasing also saw a decrease in balance, although it managed to increase its earnings before income tax by $46,738. However, the other segment reported a substantial loss of -$1,017 in earnings before income tax. Overall, the company's performance was marred by poor showings from Vive and other segments, while Progressive Leasing showed some resilience. Management is expressing caution about the company's outlook due to a challenging macroeconomic environment, decreased demand for merchandise, and reduced consumer confidence. However, they remain optimistic about Progressive Leasing's long-term growth prospects and plan to reinvest in the business through capital expenditures and strategic acquisitions. The company also intends to return excess cash to shareholders through quarterly dividends. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid out dividends totaling $15,625 in 2024 and $15,423 in 2023, page 8. Additionally, the company has also been involved in share repurchases, which are mentioned as part of its financing activities on page 45. That concludes the financial summary for PROG Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.